I'm going to start off with a quick debrief, and then from there, I'll be open to any and all questions. Nat gas. I have nat gas on my list. So that's one of the pairs I'm going to go over. So just a second. First things first. These three rules, tattoo them somewhere on your wall, your body, your notepad, wherever you need. Because these three rules are the only three rules you need. Step one, you need a daily signal. If I don't have a daily signal, if it's not clear, if it's confusing, if it's anything that's not clean, and what do I mean by clean? Clean as in we are at the highs, we're at the lows. I'm not talking about price action that's inside. If it's not clear or clean, I don't even try to figure it out. There's no need to waste mental energy on anything that's not clean. Step two, I'm cherry picking at these levels. Now I get this question a lot. What about the current day high low? I'm looking at that too. Um, but I'm mainly looking at the prior day levels because those are where the trades come from. So I'm looking for them to come from there. If it's not coming from there, then yes, I will look at the current day levels. And then step three, it's either going to be a pump coil dump or a dump coil pump on the day. Now I have switched or simplified my rules just a little bit. So you guys probably heard me say P formation low, P formation high, lower lows on the inside. That was the original three-step process of identifying these pump and dump or dump and pump templates. I've simplified that to just pump consolidation or dump consolidation pump. I do not care if they're giving me higher highs or lower lows on the inside at all. Because after that consolidation, for example, after the pump and the coil, they can only go in one direction. After the dump and the coil, they can only go in one direction. So traders could get in up top. They can get in after the breakdown. They can get in late, way after all of that, and you're still in theory you should still make at least a 1-to-1 or 1-to-2 as far as risk to reward. Let's see. After the trend line breaks, which direction is the peak formation? Is that a question? I don't even look at trend lines anymore. Oh, okay, perfect, perfect. Oh, did I just close the chart? Oh, whoops, no, I didn't. Okay. So it's either pump coil dump or dump coil pump. Now you can get two types of pump and dumps, and there's only two types. You have your pump coil dump opportunity, or it could be our trap and shift opportunity, which both of these can be with or against the trend. The trap and shift is slightly different from the coil because over here you're going to get an obvious coil. Over here, they're going to take out the high of the day or the previous day's high or the high of the week. They're going to take a level out and engulf. So that's that. It's just an A top. For example, let's say we're looking for a pump and dump after 3 days of longs. Day one longs, day two longs triggered, day three longs triggered. They may give us our A top. Whoops, excuse me. They may give us our A top trap and shift. But this is just one larger pump coil. And what do I mean by coil? So you can get price action that's going up, which means you're getting bars that are closing above each other. Let me draw this out. You're going to get bars that are closing above each other. That's not a consolidation. This is a market that is breaking out or in breakout. You have bars that are closing above each other. A consolidation is quite literally when bars are closing next to each other. Quite literally. There is and there should be no confusion about a coil, because again, whenever I see this, and this is any time frame, 15-minute, 1 hour, daily, 5 minute, whenever I see this, bars that are quite literally closing next to each other, that is my coil. So step one would be my pump. Step two will be my consolidation. I don't really care about lower lows on the inside anymore because that's what the coil is for. They're going to break structure. You're going to get that regardless. By the time they're breaking down, you should be well below the EMA, not just crossing it, well below it. And I will enter anywhere, which specifically I'm looking for engulfments and pin hammers, but anywhere below the EMA, because by that time they should be blowing off, I will enter. But just to keep it simple, once again, we have our trap and shift, which all that is a top, or you will get your pump coil dump opportunity. This is an obvious consolidation. This is my new low. And from here, I restart the process. Is it a pump coil dump or is it a top? Because A tops can be low hanging fruit too. A tops can be trend trades too. Is it an A top trap and shift? And even the A top, if you go to a smaller time frame, if we were to zoom in on this, it's still a pump coil dump. So no matter what, we're still looking for 1, 2, 3. It's just the A top will be a 15-minute A top or maybe a 1 hour A top. But on a smaller time frame, if you zoom in, it's still a pump coil dump, no matter what. So that's why I say they're both the same. It's just the only difference is where they're happening at. One of them will take out of a level. The other one will be a obvious larger time frame consolidation or smaller time frame consolidation. So it's fractal. So let's go to a few chart examples. I'm going to start off with Bitcoin. Bitcoin was an amazing week last week. One of the best weeks I've seen recently on the cryptos. Day one, we get our closing breakout signal. And what do we get in the Asian session? That's a trap and shift. That's the A top. So let's look at that just really briefly. Let's zoom in just for a second. Closing breakout signal for the closing breakout signal traders. And we get our A top. But look how this candle is one big wick, correct? And then what do we have next to it? A candle that closes next to it. And then another candle that closes next to each other. So this is a coil, quite literally. But if we zoom in, let's go to a 15-minute, for example. We have our pump. And I'm just looking for a pump up. That's all I'm looking for. A consolidation, which is it's going to be quite literally candles that are closing next to each other. And then by the time I'm getting in, I have EMA confirmation. Pump coil dump. Now this is a 15-minute chart. If you're using a smaller time frame, you're gonna obviously get in earlier, but it's gonna be the same exact formula. I have my pump, I have my consolidation. Traders could call this an M formation. Same difference. We have candles that are next to each other. It's not as obvious, but they're next to each other. And we have our engulfments, our pin hammers. We have another smaller consolidation here underneath the peak formations, underneath the levels. When I see this, I'm not scared to add another position. Let's just say I entered here. I see that consolidation, I'm adding. I see this rejection off the 100, I'll add again. I see a close below the 200, I'm adding again. So I'm full size in this position. And by the time they're breaking these levels, I'm scaling out. I may close the whole thing or I'll leave it running. So I'm actually using the EMAs to scale in because I don't want to think. They cross the EMA, they reject the EMA. I'm getting in, and I'll just move my stops accordingly. I'll slowly move them down. That way, if they do something like this, I'm not blowing my account. I'm not losing more than I should. But notice how that was a larger time frame, a top, but on the smaller time frames, it's still a pump coil dump. Now, even heading into the later sessions for low hanging fruit, because if you miss that, that's just fine. We have our new lower low, and they give us a pump coil engulfment, EMA confirmation. Traders are looking at this like a late entry. You're actually right on time because right after that, what do? They explode. So you don't have to get in up here. But why am I using these EMAs? These EMAs actually help me pick where the most recent peak formation I should be looking at. And when you hear me say peak formation, I'm really just saying support or resistance. So you see how the green one is the 100, is right, is coming right off of that high, this level. So that's where I'm focusing on is resistance. They close below or they reject off of these with this double engulfing pattern. I'm getting in. I'll put a starter in. They close below the 20. I'm in again. They break out. I may add one more position and I'll just let it go. Let's see. We just got a question. What EMAs are you using? I'm using the 20, 50, 100, 200. Now, Stacy says 20, 50, 96, 200. The 96 and the 100 is literally no difference. He's kind of trolling with that. But I'm using the 20, 50, 100, 200. Let's see. Okay, I use those to set the 100. The 100 is so the 100 and the 200 are more like, so the 100 I look at it like a minor level of support or resistance. I look at the 200 like a major level of support or resistance. And whenever those are broken, those are what confirm my bias. Let's see, 96, I think, is on the 5 minute time frame, which amounts to 8 hours. He didn't bother to change that, in my opinion. And it's really no difference as far as where the EMA is gonna be at. Because if I change this to a 96, it's you're not gonna see a difference. It's not gonna matter. But it's still gonna be pump step one, coil, which it can be an ascending consolidation. It could be a sideways consolidation. It can be a descending consolidation. I don't care for it to be perfect. All I'm looking at is the fact that these candles are literally sideways. And then when they give me EMA confirmation, I'm in. Pump, coil, dump. This requires no variables, no minutia, no gap sweeps, hunts, blocks. It doesn't even require a high bull. None of that. Now you can do that, but what I am doing now, I don't do any of that, even with low hanging fruit, because you could get a top trap and shift, lower low, pump candle, which is an A top. If we was to go in a 1 minute, this will be a minute, smaller consolidation, but it's all the same thing. If you're trading low hanging fruit, you need a pump back up. I'm not looking for a pullback. I'm looking for a pump, which is completely different. The pump will be obvious. The pullback will be minute. So there is a huge difference between the two. Bitcoin. So this closed as our first red day, which also closed as an outside day, and also closed as a day that closed in breakout. So if I just move forward, once again, outside day, first red day, and a closing breakout. So what am I looking for the next day? That will be a pump coil dump. So on the 1 hour charts, and this is why I say time frame doesn't matter. We have our pump, we have our sideways movement, and then we have EMA confirmation for our entry. Now, traders are going to say, what about the breaking structure? What about the lower low on the inside? What about this? What about that? It doesn't matter. Whenever they pump and they coil, one, two, they pump and they coil, you can now be confident to look for an entry. Yep, it's very clean. Very clean. Pump, coil, dump. You get EMA confirmation. All you had to do was get in. So let's go to a 5 minute. And this is exactly what I mean by scaling in. This is why I am now super confident. We have our pump. We have our sideways consolidation, which I don't care how you draw it. It can be on the wick, it could be on the body. It literally doesn't matter. I may just put a position in anywhere here, a starter with a stop loss above the high. They give me EMA confirmation. For example, this is a large candle, so I'm not chasing that. But they retest the 200 with an engulfment. I'm in again, and I'm letting it trade all the way back down to targets, which this was also an amazing trade here. Pump, coil, dump. So let's go to the next chart because the rest of the week was literally just pump, coil, dump. And I'm just going to show you one more example just to show you guys it doesn't have to be perfect. I'm not looking for perfect. I'm just looking for pump, sideways, dump on a 15-minute chart. Let's zoom in. I'm just looking for pump. We have our pump. I have sideways movement. Now, yes, that is a lower low on the inside, blah, blah. But they already gave me the pump and the coil. By this time, they're already breaking down. So if you're not in already, as a matter of fact, let me check the timing on this. That would be, I would actually have to turn it on. Let's see. Perfect. Okay, 9:30 open, pumps this back up quite literally. We have our pump candle. 10 a.m., third hour engulfment. Nice trade, Myla. This is really clean. Pump coil dump. That's literally it. I mean, this is an A top, trap and shift, lower low on the inside. But they're both the same thing. So don't get them confused. They're just two different types of formations that you will see. The pump coil dump or the trap and shift A top formation. And as far as the lower time frames, once again, all you had to do was wait for EMA confirmation. So if you're on a 5 minute chart, my advice, don't ever chase a large candle. If you see a large candle, it's not time to get in yet. Almost time, but it's not time. Now, if you're trading the pins above the EMA, that's different. That's slightly more advanced, but you're still waiting for them to blow off. So why not just wait, not for the cross? Because if you took the cross, oh, I took the EMA cross and I got stopped out. That's a big candle. I'm not just looking for a cross. I'm looking for them to be well below. So anywhere here, well below the EMA, I'm getting in and I'm trading it back to targets. One full expansion, two full expansions. Let's see, caught stopped out on that retracement though. Not gonna lie, but I re-entered. Okay, advice for that. Once again, do not chase large candles. Let's actually look at the timing on this. The timing will help a lot. This is the start of the 10 o'clock candle, which was a large candle. The new 15-minute rotation, wink, wink, was our entry. So if you can just wait for the 15-minute rotations, I can 1000% guarantee you'll be just fine. Now, the reason why 10 o'clock on the dot wasn't necessarily the best entry is because every hour, every start of the hour is potentially a false move. So be careful of that because the first 15 minutes can either trap you in the right direction and stop you out and then go, or trap you in the wrong direction and then go. So be wary of that because the false move is the wick on the 1 hour chart. Let's see. M entry below EMA after break of the leg. Correct. Correct. Notice below the EMAs, it does not come back. Exactly. And they shouldn't come. And that's why you should be confident in holding these. We're not looking for little pikers. We're looking for trades that blow off. This is how you make money. And if you're looking to passive funded account, all you need is two of these. Literally, you just need two. Funded account passed. Let's go to gold. Gold. This is why I love gold. This right here. It's the simple fact that almost every single day you can find either a pump coil dump or a dump coil pump opportunity. Pump coil dump pump. Traders are like, oh, this wasn't tradable on Friday. It just wasn't tradable during New York unless you got in at the beginning of the 8 o'clock rotation, which again, I don't like chasing stuff like this. I want to trade either the pump coil dump or the A top trap and shifts, which on a smaller time frame, that is a coil, mind you. But let's just do a case study here. This is what I meant, and this is what I mean by it's pump coil dump no matter what time frame you're trading. So no matter what time frame you're on, 1 second, let me switch this really quickly. Okay. Let's turn these numbers off. So if we just look here, oh, there was no pump coil dump. Oh, it didn't give me the textbook 3 session template. It doesn't matter. They pump, they consolidate, go sideways. Again, it doesn't have to be perfect. It can be a descending consolidation, be a sideways consolidation, and they dump. They give us a new lower low, which is our anchor point. They pump, they go sideways, and they dump. One, two, three. One, two. After the pump and the coil, they can only go in one direction. Three. Now, as far as New York goes, they kind of just took off. I am closing my chart when I see stuff like this. If I'm not in right at that engulfment breakout pin hammer there, I don't care about 930. I don't even care that this was tradable. Why? Because this is not the first red day trade. Thursday was the first red day signal. So I'm not looking to buy a first red day trade. I was looking for the sale. Now, if it didn't happen in your session, which this is the hardest part for traders to understand, I'm not looking for trades. I'm looking for setups after our signal in the directional bias of our signal. So congratulations if you did take this and make money, but keep doing this and come back and tell me if you're actually consistent. Keep doing that. I guarantee you, I promise you, you won't be consistent if you're doing that, if you're taking trades. Because yesterday, once again, was the first red day signal. So we're looking for the first red day trade. And one more time, if it didn't happen in your session, just walk away, which is why I didn't go live Friday. I do not care to chase these markets, and I am not going to lose money just to go live and have the urge to trade. Because even coming to the chart, knowing when you don't have a setup, you're liable to do something stupid, no matter how skilled you are. So it's best to just walk away. Because look at Thursday. Thursday was the trade, and you only need one of these. Honestly, a week with a big enough account, one of these a week, you'll be surprised what you can do on a funded account or a big enough account. You're risking 1%. Let's just say 1% is $500 to $1,000. You get 5, 6 R. You're making 3, 4, 5, 6 thousand dollars. And let's just come back to reality for just 1 second. The average pay for a 10-hour shift is $160. Some people make even less than that. So if you're making at least 500 a week, 500 to 1,000 a week off of one trade, you're already in that 10 percentile percentage of monetary gain. So be grateful of what the market can give. Don't get too greedy. And I am talking to myself even. Don't get too greedy and just remember that people are working, and some of you may even still be working very hard just to make $100. These markets, you can do very little and make 2 times that, 3 times that with just this pump coil dump or dump coil. I see that consolidation after the dump, I'm licking my lips. I see that consolidation after the pump, I'm ready. So gold gives a infinite amount of opportunities almost every single day. We got the first hour trap and shift, which on a smaller time frame, once again, that's a coil. That's 3 bars next to each other. That's a coil. Or if you're looking for the dump coil, which mind you, they have to consolidate first. This is why traders are getting stopped out early. You're not waiting for the coil. But if you learn to wait for the coil and get in after the consolidation, you will have no problem getting in. You may still be nervous, but that will immediately go away when you see profit and you move your stops to break even and you rinse and repeat. So going into natural gas actually gave a good trade on Friday. But just to look at this in a larger time frame perspective, we have our dump on Monday, our consolidation heading into the US session, and our pump. Someone could have just taken the 1 hour close and made money. You could have gotten in slightly late, maybe just taking a 1-on-1 because you know you're late. You're not trying to, you're not looking for a home run. You're just looking to make money and still made money. Now, this is what could be considered a pump day because they closed in breakout. Nail and bales on Wednesday, lower lows on the inside, A top. You have an A top here, but notice how that is literally 3 1 hour candles next to each other. That's a coil. Pump, coil, dump, but it's a trap and shift. It's an A top. But A tops on a smaller time frame are just consolidations. They're still pump, coil, dump. So traders may have gotten the nail and bail, or they may have be waiting because they're waiting for 1, 2, 3 days of breakout traders. Now, why am I not considering Monday day one longs? I may be considering it day one longs, but Monday is always the opening range, which is our initial high and low of the week. We don't actually have buyers in the market until Tuesday because of the simple fact that Monday is the opening range. That just sets the high low for the week. We have buyers truly triggered on Tuesday, day one, day two, day three, longs triggered, closing breakout signal. We get lower lows on the inside. And let's look at that. Lower lows on the inside. We know that's the recipe for the pump and dump. This was late London session, but oh well. They still give us our pump, coil, dump opportunity. The US session gives us a pump, coil, which is an A top, trap and shift, but on a smaller time frame. Let's go to a 3 minute. It's still a consolidation. You see a pump, you see a coil, you get EMA confirmation, just get in. I seen a video of, some of you may not know who Lisa Leslie is, but I'm just gonna explain the video that I seen. Lisa Leslie is a professional basketball player, or she was, and she was asking Michael Jordan questions about practice. Her question was, "Hey Michael, what do you do? Like what are you focusing on in practice?" And Michael responded and said, "I'm focusing on the spin of the ball." He said, I'm practicing on the spin, my release, the flick." He said that's what gets the ball in the hoop. And then she then asked, "Okay, but what about in a game? Are you thinking about all of that you practice on in the game?" And he responded and said, "Why? Why would I? That's what practice is for. In the game, I don't have time to think. I'm just reading and reacting. I have no time to think. In the game, I'm reenacting my hours and hours of practice. So in the game, I'm not thinking, I'm just doing. Now, if I'm not good at doing, then I need to be practicing so that I can get good at doing. And then I kind of seen like a light bulb moment in her facial expression. She was like, "Oh, okay. So in the game, just like trading in live time, I'm just executing. I have no time to think about, is that a lower low on the inside? Is that a higher high? Is that a breaking structure? Is that a coil? Is that this? The timings, the levels, blah, 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 blah." You only have time to think about that in hindsight. You don't have time to think about that in live time, which is why you need something simple like pump, coil. Oh, is that a coil? I don't have time to think about that. They're going sideways. That's a coil. They in golf. I have EMA confirmation. I'm in. I don't care if this is just the first hour. I don't care if it's not New York Open yet. New York Open, they pump, they coil, they go sideways. I get EMA confirmation, EMA confirmation. I'm in. Even if it's just back down to this low for a scalp, I'm in and I'm out and I'm not thinking. So I just thought that was an excellent analogy to explain for live trading. I do not think at all. That's what my playbook is for. That's what hindsight is for. In live time, it's just pump, coil, dump, dump, coil, pump. Correct. Pump, coil, candles next to each other, EMA confirmation, dump. Correct. That is literally it. Now, I am using these three steps here. I need a signal day, which you can identify that on the daily, the 30 minutes, the 1 hour, the 4 hour, however you're doing it. You can identify these signals. However, now I would suggest using the daily because it does give you a bigger view, a clearer view of what you're looking at and where you're at in the month. Step two, I'm looking at my levels. Where are my levels? I may, for example, now I don't know this ahead of time, but I may have to draw a prior day level across. I may have to draw a prior day level across. I don't know though until the next day, but I may have to draw these across and just see if they get there. And if they do, what's the behavior price? But I don't know. Now I get this question a lot. Am I drawing 3 days back, 2 days back? The most I will go back is the prior day. I won't go, for example, I won't draw Thursday's high all the way across. Now you can, because think about this. This is where they broke out, and that's where the money is. And if they're coming back inside of that breakout level, that may be a support turned into resistance. But you do not have to do that. As a matter of fact, I don't care to do that, but you can do that because think about it. The pump and dump is all about trapping breakouts long. The dump and pump is all about trapping breakouts short. So you can do that, but you don't have to. Swiss yen, excuse me. Um, we have multiple days to break out. They gave a dump coil pump on Thursday. They gave a pump coil dump on Friday. Let's look at Friday for a sec. Let's go straight to the 5 minute. And let's just look at the simple fact that currencies open at 820. It doesn't mean the trade will be right at 820. But this is a smaller time frame. The US session starts. They give us a lower low on the inside. Okay, cool. That's my anchor point. They go sideways right at that level and give me EMA confirmation. I'm in and I'm out very quickly from high of session to low of day. So, but the high session was right at our level, which was very clean. It won't always be like that. If you're not trading the high of day, you're trading the high of session. If you're not trading the previous day's high, you're trading the high of day. So you're selling high regardless of the fact, or you're buying low, whether that's previous day high, high of day, or high of session. You're selling high or buying low. Thursday's trade. Asia gave our dump coil pump opportunity heading into the London session. And then the New York session gave us our breakout London. Pull back, trap and shift, V bottom, continuation trade, back long, New York open, right at our previous day high level, low hanging fruit. So it's not rocket science. You can add all these variables if you want, but they are not necessary whatsoever, which is why the charts that I've been posting here recently, they don't have the session timing windows. They don't have, well, I do use the major out numbers, but they're just naked charts. And in my opinion, it's a whole lot easier to focus on pump coil dump and dump coil pump when you don't have all that on your chart. Now you can, but you can just look at your top right corner, top right bottom corner and look at the time. And if it's 9:30, then it's 9:30. If it's 10 a.m., then it's 10 a.m. I don't need colors or extra variables on my chart for analysis, quote unquote. So again, it's either pump coil dump, dump coil pump. As a matter of fact, one of the cryptos that is in my basket just gave a beautiful pump coil dump opportunity on our Sunday. They give us a signal on the day, lower low. They pump it up. They go sideways. That's an obvious consolidation. They give me EMA confirmation. I'm in. If you're trading low hanging fruit, there's your new low. Let's zoom in on that. There's your new low. They go sideways, even just for that little bit. They go sideways. I'm well below the EMA already. So anywhere here, I can just get in, especially coming off of the previous day's low level. I can just get in. And let's turn on the yellow box for just a second. Yellow box, New York timing, third hour, wink, wink, third hour. That's all you had to do was wait. Timings, levels, behavior, price. Um, Oil last week. We have our pump closing breakout signal. They they coiled this all the way into our session timing window. Lower low, pump back up. That's a top, but remember that is a consolidation on a smaller time frame. They trade from our breakout level and they're gone. Now let's just say you're late and you want to get in. All you had to do was get in. Now I'm not saying to just chase large candles because I'm never doing that. But let's just look at this on a smaller time frame for just a second. They break out. They pull back very so slightly, which that is a consolidation. I'm well below the EMA. That's a pin hammer right there. I'm in. You could also just take the breakout candle. Man, yeah, those the EMAs are a cheat code. They really are. EMAs are, which is why I have them on my chart now. I don't care about. Oh, and the major round numbers is also a huge confluence, by the way. If I'm not getting in at a major a major round level, okay, I'm just gonna get in at a quarter level. So the major round numbers are actually really helpful for those that are just struggling with entries. I don't want to be getting in inside of number levels. I want to be getting in at number levels, at or off number levels, at number levels. So that could be also another confluence you can add. EMA confirmation, major round number levels, and the clock. Look what time this was. 8:45 on the dot. New 15-minute candle on the dot. Let's just say you came in just a tad bit later. This was so this candle opened at 10:10, but it closes at 10:15. So new 15-minute candle, low hanging fruit. There you go. You're not too late to make 50 pips and just call it a day. 30, 40, 50 pips. Below the EMA, below our major round number level, core, etc. And just call it a day. Now, I know I'm making this look very easy, and honestly, it is very easy. You just have to, in live time, eliminate as many variables as possible. I, on the side, I box on the side in the gym. I don't box professionally. I don't box people, but I spar and I practice. I play basketball. I practice. And I'm doing the same exact things on the chart with these sports. I game. I play first person shooters. I'm doing the same thing. I don't have time to figure out or focus on my aim. Oh, my aim was off. Oh, my stick was off. That's what practice is for. But when I'm in the live performance of it, if you have a simple rinse repeat process, exactly, simplicate, and you can repeat it no matter what, because pump coil dump is easy. Dump coil pump, that's easy. I don't have to think about high bull, low bear, breaking structure, 3 levels of rise, pullback, infinity gap block order, institution hunt, whatever people are calling that. As a matter of fact, there were so many ICT traders that were buying the Nasdaq Thursday and Friday. And let's just look at these trades. Thursday and Friday, there were so many ICT traders looking for buys. Well, Friday they did give a buy. But Thursday, are we really buying Thursday? Where? Tell me, where is the buy? They give us a new low. They pump it up. We're below the EMAs. We're below the previous day's low. And they dump. And that is literally it. They pumped it up at the very beginning of the day. They consolidate heading into our US session. And they dump. That is it. And they're coming off of our major round number levels. That's even more simple. But if we zoom in here, I'll tell you exactly where the diddlers were trying to buy. So we have, let me take these numbers off. It can be a little distracting. So they're saying, oh, we have our inversion, whatever, blah, blah, blah. We have our 10 a.m. key open. We have our break-in structure. And they're buying this. It is it's just it fathoms me. It really does. And even the traders that went short, oh, we have our fair value gap, consequent encroachment, blah blah, and they get stopped out. And the reason why is because I'm not looking for a pullback. Remember, I'm looking for a pump. I'm not looking for a pullback. I'm looking for a pump. We get our engulfment. We're below the EMA confirmation. They're coiling, they're going sideways. This is where you can go bang, 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 bang whenever they're going sideways like that. Because that's how you know they're going to, or let me just not say no. That can give you a really strong conviction of a blow off. Yeah, that's pretty embarrassing, right? You're buying the Nasdaq on the range reversal day, Thursday. It's pretty embarrassing. Euro dollar. This is a case where they don't have to take out the previous day's high. Why? Because the whole day was a consolidation. The whole day was our pump. Thursday, closing breakout signal. And the whole day was a consolidation. But let's look at this a little bit careful. We have our pump. We have our coil. We have our dump. We have our new low. We have our trap. We have our shift. It's literally that simple. It's that simple. Closing breakout signal. New low. Pump, coil, dump. If traders took that opportunity. If they didn't, they pumped it up one more time and gave us our what? A top, trap, and shift. But on a smaller time frame, that A top is a coil. That A top is still a consolidation. They give me EMA confirmation. I'm in and I'm out when they hit the stops. They cross that 200, and I don't want to just look for a cross. I want to look for a pump and dump. They give me confirmation. I'm getting in again. I'm in again. Back down to the lows. So the 200 EMA could be an excellent opportunity to scale in. I've done it plenty of times within the past month. So I can confidently tell you guys that 200 EMA, this perp one, can be a excellent level to scale in safely because when they cross that, bias confirmed. So that's about all for our debrief. Any and all questions are welcomed if there are any. And yeah, I'll just wait and see if there's any questions. But quick debrief, signal day, levels, pump coil dump, or dump coil pump. You don't need any colors on your chart to identify that. You don't need any levels. You really don't even need levels on your chart to identify that. You don't need any gaps, sweeps, hunts, blocks, infinity fair value gap, consequent encroachment, premium discount levels, etc. And yes, this is recorded and will be posted in the VIP chat very shortly after. You're very welcome. I don't expect any questions, but if there are any questions, don't be scared. But there shouldn't be any questions. This was this is a really good breakdown. I prepared these charts for you guys.
I
And
do have a quick question.
go ahead.
Okay, so like on the trap and shift, so does that normally happen like at the prior day's high or low level? Is when
Yes.
you'll see it?
Yeah, so that's the best time. That's the easiest time to see it. I'll
Okay.
actually give a chart example. That is the Euro Aussie. Um, Now on a higher time frame, it was at a top, but that a top on a smaller time frame is just a consolidation. The
Okay.
fact that they engulfed on a higher time frame forex pair, traders can just take that. There's no need to even scale down. Traders can
Hmm.
just take that because that's still a coil on a smaller chart. But the a top, just to simplify it, the trap and shift is a top on a 15-minute and up.
So is that like a stop hunt basically?
Pretty much
Okay.
stop playing.
So he just changed the lingo.
Correct.
Okay.
Because there's your 1, 2, 3,
Right.
3 hours up,
Hmm.
which it can also be 45 minutes up if it's the 15 minute.
Right.
And then they immediately come right back down. So they
Okay.
trigger breakouts. Which funny enough, I was a victim of this so many times, buying that. Oh, they're breaking out. Oh, they're gone. No, they're not. They come right
And buyers
back
are
down.
trapped.
Trap and shift. So it's the same thing,
Hmm.
just different lingo. Stacy is getting on my nerves with that at this point. I guarantee you, I'm gonna give him 30 days and he's gonna say something new, but it's gonna be the same thing. Every 30, 60 days, he says something new, but it's not new. It's just pump and dump and pump. That's it. But if there are no other questions besides that, I will see you all free cash Wednesday, free cash Friday, and I will post my watch list later tonight for Monday. Because I believe we don't have any news, but we have a pretty backed up news calendar for this week. So this week should be pretty interesting, actually. Let's see, what do we have here? You're very welcome. First day of the month, correct. You're very welcome, you all. I'm gonna end the recording here and get this posted as soon as possible. And I will see you all on the right side of the market. Pump, coil, dump, dump, coil, pump. May the markets be with you all. Blessings to you all as well. Have a great rest of your weekend. Plenty of rest. Peace.